Diploma is the next thing on our list. It's on my side of the list here, and that stock is up 6 and just under 6.5% this week. They had a trading update, which follows not so long since their last one, where the stock dropped a bit. And it's a bit hard to know exactly why the stock is up. The reason being, it came out the same day as the UK inflation news, which was basically better than expected, and the day before the UK GDP number, which was also better than expected. And those two things collectively actually lifted quite a few shares along. And Diploma is no doubt being pushed a bit by that, but at any rate, it didn't fall again. And it's maybe a little hard to figure out why here. It's only a trading update, so it's a little one. But organic revenue for Diploma was up 7%, and total revenue was up 12%. This is, I think they're calling it Q1 of something. Fair enough. It's close enough to that. And they're guiding for the same this year as they were before, which is 6% organic and 2% more from acquisitions. The market was disappointed by that, I think, guidance figure, along with some slowing organic growth in the most recent session. But broadly speaking, I think things are largely in line with what they were expecting. It's not been a huge amount of time since then, but rates of change-wise, which is what I thought the market was reacting to before, it's still lower than the sort of 14% that they were looking at last time out. Possibly being driven higher by inflation. It's the kind of company we like, Steve, but I didn't see this as particularly a reason for the stock to be snapping back after a disappointing turnout last time.
No, it was fine. I think the issue probably was that I think they were expecting Diploma to not back this this guidance that they've given, but they actually did come out and say, yeah, actually the guidance we've been giving you is we're definitely going to back it. And off the back of it, there was some purchases from the management team of the shares as well. So double confidence kind of booster there from Diploma to the market. It wasn't the most exciting report I've ever read, Steve, but it was fine. It's a nice show of strength from Diploma in the face of what's been fairly tricky times for all of these kind of roll up companies. There's they've all had kind of spotty-ish periods, but I think Diploma's probably our favourite out of the lot, Steve. And if we can get it at a valuation that we can make sense of, it would probably be in both our portfolios in a heartbeat.
I think that's probably right. I mean, you kind of want your roll-ups to be a little bit opportunistic, right? Which makes guiding hard a bit. You sort of want them to... This doesn't really work in the stock market, especially when you're trading at a big earnings multiple, which Diploma is, whether you use the adjusted ones or the official kind of IFRS ones. But you kind of want them to say, no idea what's going to come in terms of acquisitions. We'll see what's available. If we find something good, we'll buy it. If we don't, we won't. But you can't go saying that unless you have to be Buffett to go saying that, basically. And Diploma ain't Buffett, not yet, but they are growing faster than he is. You've been watching a segment from the Playing FTSE show, brought to you in association with our favourite broker, Trading 212. For the full version of the show, check us out on Spotify, Apple, or wherever you get your podcasts. And if you open a new account with Trading 212 using the link in the description, there's a free fractional share in it for you. Just make sure that you use the code FTSE when you sign up. Terms and conditions apply, and do remember that when investing, your capital is at risk.